What is the tax torpedo? How much longer is the Social Security Trust Fund scheduled to last? What huge changes are coming in 2026? What states and how many states currently tax Social Security? My name is Tommy Cloud. I am president of Third Act Retirement Planning, a company that I started back in 2000. I am also a certified financial planner and qualified Kingdom advisor. Today we are going to be answering all these questions and even more questions regarding the topic of the 7 dark secrets of Social Security taxes.
Many people have said, I'm not worried about Social Security. I'm not planning on that. It's going to be gone by the time I retire. I'm not going to worry about it. And there is some validity to statements like that. There are definitely some dark secrets about Social Security and Social Security taxes that I really don't think most Americans realize. Certainly not talked about on the news and in the mainstream media, but they're there. And we're going to talk about those. First one I want to talk about is one of the most astonishing ones, and that is the impact of unadjusted income thresholds. Social Security was signed into law in 1935, on August 14th of 1935. And Social Security was first collected in January 37.
All right, so Social Security the taxation of it was first started in 1980, and this was done through an amendment in 1983 that was signed during the Ronald Reagan administration. This was the first time in our country that Social Security income had ever been taxed. I think this lack of inflation adjustment on the income threshold has been a huge additional tax on Americans, and it's been one of the main reasons that Social Security has been able to stay afloat and that trust fund hasn't come down faster than it should. So the big changes that will take place in 2025 and then start being implemented in 2026 is that the lower income thresholds will be phased out by 2026. These thresholds will be significantly increased from $25,000 for single filers to $50,000 in 2026. And for joint filers, they're going to be increased from $32,000 to $100,000. So that will be a much higher threshold to see people's Social Security getting taxed versus where it is now. So that's a bright spot to all these dark secrets, this first dark secret that we've been talking about, which I think has probably been the most devastating over the past 40 years, is not adjusting the income threshold for taxation on Social Security benefits one time. That's going to be a big improvement. If we look at just the income percentile calculator, we can see that starting at age 62 to age 80, if a household is earning $100,000, they are basically in the top 31%. So essentially, starting in 2026, if we keep roughly the same income numbers as we have now, about 68% of joint filers will not be paying any taxes on their Social Security. Additionally, if you do it for single folks, about the same, 71% here for individuals. So if we look at that, 71% of people are not going to be paying taxes on their Social Security in 2026 if they are single, if they file single. And it's going to look like about 29% of people that are single will be, because they're going to move it up to 50,000. Okay, so that's number one. Number two is what I like to call the tax torpedo effect. Before we talk about the tax torpedo, I'm going to interrupt this broadcast just to encourage you to help me reach my goal of 100 subscribers by the end of this year by subscribing to this channel. Only subscribe to the channel if you like the content and you find it useful, though. Thanks, and let's get on to the tax torpedo. And as you can see here, in this particular case, the Social Security benefit was $50,000 for this couple in a given year. Their IRA income was $10,000 In one case, they went through the year, but in another case, maybe they had an extra expense, or maybe they had an emergency popped up. They need to pull another $10,000 from their IRA. That's case two. And then you can see the taxable Social Security benefit goes from 16.6 to 25.1. Now, the taxable Social Security benefit is used and calculated by using the IRS worksheet. So we're not going to go over that right now, but just know that's what's used to calculate how much of the Social Security is taxable. Then we're going to take the adjusted gross income in these situations, which is substantially different, just over a $10,000 additional withdrawal from the IRA. It's $18,500 different than what it would be in the first case without doing that. You'll still have the standard deduction of $27,400 in this particular year, the year that this deduction was used. And then the taxable income is going to go from $20,000 to $38,000, which again is an $18,500 difference. What's astonishing is the tax. The tax doubles for an additional $10,000 withdrawal. You can see that the tax more than doubles and goes up by $2,200. And so the overall effective rate goes only from 10 to 11%, but the marginal rate, that's where the issue comes into play, is going to be 22% on future money that they earn that particular year because of what we call the tax torpedo, and how the provisional income goes up and it hits a certain point with those Social Security benefits taxation rules, and it ends up jacking the marginal tax rate, which is on the next dollar earned for couples and single filers here in the U.S. Under the current threshold brackets that we're using. So that's dark secret number two, is the tax torpedo. Number three would be, I believe it's complex when you talk about calculating tax on Social Security for retirees. You have to have this provisional income, which is adjusted gross income plus non-taxable interest plus half your Social Security benefit, and then you have to go and use an IRS worksheet. It requires oftentimes retirees to go find a professional to calculate their Social Security. So again, number three is complex. Number four would be that while 80% of the states do not tax Social Security, I think another thing that most people don't realize is that there are still 10 states that do tax Social Security income. And those states are Colorado, Connecticut, Kansas, Minnesota, Montana, New Mexico, Rhode Island, Utah, Vermont, and West Virginia. Dirty little secret number five is that their proposals to completely eliminate the wages that are subject to Social Security tax, which could significantly impact our economy. If people are paying taxes all the way up to $500,000, $600,000, $700,000, those people already have a progressive tax rate that goes up to 37%. If they continue to pay Social Security, it's going to go well into the 40s, and that could significantly impact the ability to hire employees and pay employees. And so that is a dirty secret, little secret number five, is that they may completely remove the wage cap for Social Security tax. Dark secret number six. And this one, they just keep getting more and more fun, don't they? I tell you what, Social Security's cash flow deficit contributes greatly to our overall federal deficit. Many people don't realize that, which is continuing to exacerbate our nation's fiscal challenges altogether. The cumulative deficit, this is just for the Social Security Trust Fund alone, and this is the amount that is being taken out versus the amount that is being put in, is going to be $4.1 trillion, or $410 billion per year. And we know this is not sustainable. This further highlights and emphasizes the importance for reform, and I'm not trying to advocate for that here in this video. But one thing that I can tell you is that if this continues, one of two things will need to happen. And you're going to love both of these, sarcastically said. Number one, increase taxes, which we just talked about that. Number two is reduce the benefits. So how about them apples? So our final dark secret of Social Security taxes is going to be just the long-term outlook of Social Security. As you can see, the fund kind of peaked out here at 2020, we'll call that 2019, 2020, as you can see from the graph. I really wanted you guys to take a look at this and see for yourself. As you can see, the fund will run out in 2035, and this is just a function of the amount of taxes that are being collected from the younger generations, from the baby boomers, versus the amount of baby boomers that are retiring per day, which is a tremendous amount. And also the younger generations not only are less population-wise, but also they're not earning as much as the baby boomers. So this is going to run the thing down to zero in 2035. This is in billions of dollars over here. The other thing to realize about that is that when this was, life expectancy at birth in the 1930s was about 58 for men and 62 for women. And you can see right here, the retirement age was 65. So they barely had to pay Social Security at all. Now, in recent years, the life expectancy at birth is approximately 79, and their retirement age is 67. So the administration, the fund, is having to pay out 12 years versus only an average of, depending on if it's a man or a woman, they're paying out anywhere from 3 to 7 years, which is way more than double, almost triple, and even quadruple what they're having to pay out now. The other thing to realize is that even though the fund will run out in 2035, they will continue to collect taxes and be able to pay something out. It'll just be a less benefit. There's many things they can do. They could change the start age from 62 to 65, which could take the max weight age from 70 to 73. We've already talked about increasing the wage base upon which they collect the Social Security taxes from. There are different options that they have to work with the fund running out in 2035. Let's review our 7 dark secrets of Social Security taxation one more time. Number 1 is the income threshold has not been adjusted since it started. Number 2 is the tax torpedo effect that we talked about and the marginal rate, how that can be impacted. Number 3 is just the complexity of it. Number 4 is there are still 10 states that tax Social Security. Number 5, there is a potential elimination of the Social Security wage cap for calculations. Number 6, Social Security is expected to contribute $4.1 trillion to the federal deficit over the next 10 years. It's already contributing mightily to the federal deficit. And number 7, our final dark secret is that the Social Security Trust Fund is set to run out. If you have any questions about your Social Security and how it's taxed, just click on the link in the description of this video and you can set up a free, no-cost 20-minute call with me. We'll take a look at your Social Security and see how it may or may not be impacted. Until next time, I'm Tommy Cloud with Sudden Wealth Stewardship Channel.